A very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Tuesday, the 4th of November. We thank you for joining us at this time on the show.
Let's begin with your news now. South Sudan's president has appointed a new finance minister, the eighth change at the helm of the treasury in just 5 years. Barnaba Bakchol, who previously held the position before his dismissal in March 2024, returns to replace Athien Ding Athien, according to a decree read on state-owned South Sudan Broadcasting Corps on Monday. Athien had served about a year as finance minister following his initial appointment in 2020. In the latest episode of the Yellow Chair, MTN Group President and CEO Ralph Mupita sits down with Standard Bank Group Chief Executive Sim Chabalala to discuss the importance of staying grounded in organizational values while navigating uncertainty and complexity across diverse markets.
If we think about the regulatory space, and I speak specifically for the telco industry, is, some of the regulations we have in the continent, are stuck in a different era. If I speak about telecommunication, I think I was quoted in Kigali 2 days ago and saying the telecommunications regulations we have are stuck in the voice era. So the voice era is 1994 all the way to probably 2009. The data revolution kicked off at about 2010 with 3G services, etc. But when you look at the regulations, when you visit lots of our countries, the regulations are still stuck in that era. They want 4, 5, 6 players in a market. All of these must be contributing to infrastructure and building. But the world has moved on from that. The US has 3 players for 300 million plus. China has 3 operators for 1.5 billion. India has 2.5 for 1.5. And what they've done is they've modernized the regulatory frameworks for today. And so these are some of the additional things we need to be embracing to say, if we're going to attract capital into these markets for the massive investment required to build the digital railroads for Africa, you've got to make it, to Sim's point, conducive for the investors to say, we'll put the next incremental dollar in Africa because we're going to see the return. Otherwise, the money will flow to Brazil for those who have emerging multiple outlets. So that conversation we have to have, with the perspective of Sim as shareholders globally, so he sees and engages. So we need to bring.
In Mozambique, the government has set a treasury bill issuance limit of 505 billion meticais for 2025, almost double last year's level, with over half allocated to debt replacement. According to a Ministry of Finance decree, 160 billion meticais will cover the cash deficit, while 345 billion meticais will be used for refinancing. The 2025 state budget, approved in May after delays due to elections, reflects a sharp increase from the 275 billion meticais cap set for 2024. At the Africa Financial Summit in Morocco, chairman of Coronation Group, Agboje Ag Imokade, said Africa is not short of capital, but of connection. He highlighted that trillions in untapped funds remain idle due to weak financial plumbing, noting that the real challenge lies with the policymakers and financial leaders responsible for channeling capital into productive sectors. Here are excerpts.
Reports say that Africa has potentially about $4 trillion in African institutions, African households, available for investment. African GDP, as we know, 2.5 trillion, and maybe because of the informal sector, probably larger. I'm firmly of the belief that the market is able to absorb everything that we have today. And perhaps even if after that there is a gap, I don't think the gap is that wide. So clearly the issue is an issue of flow of capital. The capital is available, but it's not being channeled into the opportunities that exist in Africa. So there's a problem with our plumbing. When there's a problem with the plumbing, right, don't look at the pipes. Let's look at the plumbers. They're in this room. Who are the plumbers? The leaders in the public sector, the leaders of the financial institutions. What we're not spending enough time on is the plumbers, the mindset of the plumbers to fix the plumbing problem. Now, if you take Japan, for instance, and you think about Japan post-war and this great reconstruction miracle that is spoken about, that was a clear case, very similar to what we have here. And contrary to what people actually think, the domestic capital in Japan was significantly more than the capital that was mobilized by the US government, however significant it was. And it was channeled into the sectors that would create national wealth, productive wealth for Japan. Reports say that
in Ethiopia, the Ministry of Revenues has issued a draft VAT refund directive introducing new rules for eligibility, investment, and exporter benefits. The proposal redefines heavy investment to projects costing either 100 million birr or $100 million and raises export refunds to 50% of input costs. It also tightens refund rules for mixed transactions and excludes condominium contractors and capital goods lease financiers. The directive removes the bank payment requirements and expands refund access for embassies, NGOs, and international organizations. In Kenya, KenGen has partnered with China's Kaishan Group to launch the world's first geothermal-powered grain fertilizer plant in Olkaria, Naivasha. The facility, powered by 165 megawatts of geothermal energy, will produce up to 300,000 tons of green fertilizer annually, making Kenya the first in Africa to industrialize fertilizer production through renewable energy. The project will cut over 600,000 tons of carbon emissions yearly, create about 2,000 jobs, and stabilize fertilizer prices, supporting food security. President William Ruto called it a game changer, while KenGen CEO Peter Jenga said it marks a milestone in clean industrialization. Finally, on News Now, Africa is home to the largest number of small and medium enterprises globally, accounting for some 38% of the continent's gross domestic product. But that is still scratching the huge economic potentials that the SMEs can generate for the 1.2 billion people economy. Toyin Sani is an investment banker and the CEO at Emerging Africa Group. Sani spoke recently at the NEPAD Business Group Nigeria Forum on how SMEs can find suitable access to finance.
We cannot overestimate the importance of SMEs to the growth of our economies and to the future of this nation and indeed this continent. Apart from the fact that these SMEs create 80 to 90% of the jobs on the continent, they are also responsible for 38% in sub-Saharan Africa, 38% of GDP. Now, this is you need to remember that we're talking about a region where a huge number of the operators are unstructured, unregistered. Some of the words we've heard here, they're not included in the financial system. They are off the grid. So imagine if all of their contributions were actually recorded. You would be looking at maybe 50% or more of our GDP that is coming from these SMEs. So we cannot overestimate their importance, and we have to stop, as a people, we have to stop ignoring them. Now, I want to come to the specific question you've asked me, which is what can we do as investment bankers? And I have to tell you a little bit of my personal story, which is that I used to run a leading investment bank listed on the exchange. To the glory of God, wonderful company, and they're still doing excellently well. I'm proud of them. But I recognize the fact that we needed to deepen access to finance and go to people that would be below the radar of your standard investment bank.
I am Melissa Enoch, and that's it on News Now this Tuesday. The show returns shortly with Grace at the FMDQ Archives Room for our Markets Round. Welcome back to Money Moves. Let's now go over to Grace for today's markets review. Hello there, Grace. How are the markets wrapping up today?
Thank you, Melissa. Let's track today's market, starting off with the equities as usual. The African equities saw losses today across major markets. In Nigeria, the NGX All-Share Index closed on the negative, down 0.272%, while the Bay Area VM also closed down 0.90%. The Nairobi Securities Exchange dropped 0.56% to 189.08. The Johannesburg Stock Exchange fell sharply by 1.84%, while in North Africa, the EJX30 advanced 1.15%. Let's do a quick round on some of the Pan-African currencies. The rand weakened 0.93% to 17.47, while the naira appreciated 0.16% to 1,437 naira 85 kobo. The Egyptian pound firmed 0.48% to 47.42, while the CFA franc edged 0.26% higher to 570.96. The Moroccan dirham gained 0.13%, while the Kenyan shilling was almost unchanged at 129.25. Let's switch into the commodities data deck, beginning with energy prices. Brent crude slipped 1.14% to $64.15, and WTI fell 1.34% to $60.23. Natural gas eased 0.94% to $4.22, while Arabian gasoline lost 1.05% as at 13:20 GMT. And finally, two metals prices. Gold edged 0.27% lower to $4,003.20, and copper declined 2.71% to $4.93. Platinum slipped 1.93%, while aluminium gained 0.79% to $2,906.15. Iron ore was steady at $105.84 as at 13:24 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates for today. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.